Let's talk a bit about rate again today. Insurance rates are soaring and going crazy, and there are lots of factors that go into this, and we're not going to dive into every single factor today that goes into it, but let's start hitting on at least a couple. Let's start with inflation. Yes, you hear it all over the place, and yes, you hear about all sorts of things being, quote, blamed on inflation, but that is the reality. Think about it this way. If lumber has gone up 20 or 30% in the last 3 or 4 years, and insurance companies are the ones buying the lumber to rebuild your homes, doesn't it make sense that that increase is going to have to come somewhere? If labor is 20 or 30% more, and I don't know what the actual numbers are, I'm just saying, for example, all these different things have gone up. We do in fact know labor is more. We do in fact know supplies are more and sometimes harder to get, causing delays, causing people to be dislocated in alternate housing while their housing is being fixed. You can see where all of these expenses are going to start to stack up and create an impact on an insurance company's bottom line. And we all know they're in the business to make money. Nobody has any disagreement with that fact. You might know that insurance companies are heavily regulated and are required to have a certain amount of money in reserve, basically to pay out claims of all their policyholders. Then insurance companies are also insured. That's called reinsurance. That's a whole nother thing. But the point is all of this is regulated. If an insurance company lets those numbers get out of balance, they can actually be shut down, given cease and desist. They can get themselves into a position where they can't buy reinsurance. If they can't buy reinsurance, then they can't continue to sell policies and exist. So it's this constant dance of math, statistics, analysis, and future modeling. What is the weather going to do next year? What are the catastrophe losses going to look like? Is there going to be wildfire? What's the likelihood? What might, in certain parts of the country, what's the hail look like? All of these things are taken into consideration when setting insurance rate, not to mention the losses that have already been paid out. We know that the cost of repairing a car is dramatically different now than it was, say, 5 years ago, right? These things all come into play when setting insurance rate. And that's before we even begin to get to anything about your driving record, your home, the age of your home, the unique qualifications and characteristics of your home, the types of cars you're driving, all these things. That's before we even got there. So this is just kind of the first section on things that insurance companies consider when rating policies, and we thought you'd want to know. Thanks for stopping by.